Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Welcome to The Wealth Flow. My guest today is Dr. Erin Hudson. She is the managing partner at Quattro Capital, and she heads client relations and has a doctorate in chiropractic care. Erin transitioned from owning Hudson Wellness Center to real estate investing, including single families and multifamilies. And she loves empowering others with financial literacy. Quattro Capital, the company that she's managing partner for, has 1,711 units across 18 properties, $175 million in assets under control, and then also 91% portfolio occupancy. So that's a fantastic occupancy rate. Erin, welcome to the show.
Well, thank you. Thank you so much, Keith. It's such a pleasure and an absolute honor being here with you today. And I hope we give your listeners some good nuggets.
I hope so too. And maybe to start everything out, I like to start with kind of where you grew up. And, I know you had the chiropractor business prior to this. We could talk about that in one show by itself, but would love to hear how you made the transition from that and kind of your background.
Yeah. So I like to always start it off. I'm a mom of 5, and they truly are my why. I know it sounds cliche, but they are the ones that get me up in the morning to continue to just grind and build and leave that legacy. So they truly are my motivators for sure. But I will tell you, let me just take it back to growing up. I was raised in a home where my parents worked 9 to 5, building somebody else's dream. They would grind at it, come home exhausted. And of course, they were not building it for to leave a legacy or build that empire. And I remember at a very, very young age, Keith, that I thought, this seems like it is backwards. Like, working this hard, having all these kids, and still there's just not enough time in the day.
Right.
And so I realized that there was that lack of freedom. And at a very young age, I would say it was probably around 14-ish, where I thought, I'm not going to live my life like this. There's got to be a better way. And all I could think was, I just want to be my own boss. And it started with me wanting to be an obstetrician and deliver some babies. And then I ended up landing in the chiropractic realm. I had 2 uncles that were chiropractors, extremely successful in Southern California. I was living in Southern California, and I went that route. I don't regret it at all. I had 2 practices, 30 employees. Headaches. No, I'm just kidding. 30 team members. And I'm telling you, I loved what I did. I absolutely did. I loved my teams. It was a blessing to be able to go to work and to help change lives and just to sow goodness into individuals. But there was something that I did not like. I had to trade my time for money.
Right. Yeah.
Right. And then furthermore, I was making great money, but the problem was living in Southern California, I was having to pay Uncle Sam close to 50 cents of every dollar that I was making. And so fast forward, I started to invest in single family rental properties, and I got a taste of something called mailbox money.
Right. Yeah.
And let me tell you, when I got a little taste of that, I was obsessed. And fast forward, within 2 years, I acquired 26 rental properties. And from there, I graduated. I moved into the multifamily realm and found out about the goodness there. The truth is, I thought that multifamily was just for the billionaires. I
Right.
had no idea people like myself and people like your listeners could actually get in the game and invest and be an investor in these apartment buildings. And once I found out the goodness, the party was over and I jumped in with both feet. So I know that is an awful lot. Happy to go back and we can break it down a little bit, but that is the high level.
Yeah, let's break it down just a little bit. First, you're the mom of 5 kids, girls, boys. What combination of such?
Yeah, so I have 5 and it's girl, boy, boy.
Oh,
So
there you go.
3 boys and 2 girls. Yeah, super fun. They keep me on my toes, that's for sure.
Right. That's awesome. And so when did you start investing in the single family while you still had your business as a chiropractor?
Yes.
Yeah. Okay. And so did you have other chiropractors on staff, or were you the one doing all of the actual work there?
Yeah, I had actually 2 offices. And so I had another chiropractor that was in there.
Okay.
But I left in 2017 to move to Texas. And when I left to Texas, I brought in a couple chiropractors, and I had 2 offices at that time, and I brought them into one, and I brought in 2 chiropractors, and I was the director for 2 years.
Mm-hmm.
And then in 2019, I sold.
Okay. Perfect.
Yep.
Perfect. And what brought you to
Yeah.
Texas?
Oh, heavens, that's like a loaded question. This may not sound well with your listeners, but it was a few different things. I would say, first and foremost, let's just be honest, California is going to hell in a handbag for business owners.
Right. Yeah.
Number
Texas.
one. And I don't vaccinate my kids. And so I wanted to go to a place where Texas, you have freedom and you don't have to vaccinate your children. And so that was it. And then in the real estate space, things are quite costly in California. And I knew I wasn't going to play small in this space. I knew I was going to go big, and I wanted to be in the land of opportunity. And what better place than Texas?
For sure.
So
Yeah.
here you have it.
And on the single family, was that in Texas, or were you buying out in California?
No. So I was in California. I started to do research of where was the best places to invest in the United States, where they had high occupancy,
Mm-hmm.
low tax cost, and where you could evict a tenant if they didn't pay their rent within 30 days. And it, again, was not California.
Right.
It was actually Indianapolis, Indiana. So I went on to buy properties in Indianapolis, Indiana. And then what happened from there, I had other patients and friends and family say, holy smokes, how have you acquired so many so quickly? Can you help me? And so I went on to help other people buy homes, meaning I would buy one and then I would turn around, increase the price and sell it to them. But I would make it a turnkey with my property management company and with a tenant in place.
Okay.
Because at the end of the day, you probably have heard this, Keith, who solves the largest problem gets the biggest paycheck.
Right.
So nobody in California wants to buy a single family property in Indiana without a tenant and without a property manager. So I brought the solution to the problem, and it was pure success.
Yeah. That's
and
awesome.
Yeah, when I say pure success, I'm talking about we went on to do 231 buy and sell transactions in a 3-year time frame.
Wow, that is a success. My gosh.
Hold up. You ready?
Yeah.
Without a real estate license, without having even gone to Indianapolis, Indiana, with a warm base, because here's the truth. If people know you, they like you, and they trust you,
Mm-hmm.
they want to do business with you.
Yeah. Yeah. Perfect.
Yeah.
That's amazing, actually. That is quite amazing. I mean, just to be able to do all that without even having to travel over there to see every property. I mean, it's not necessary, right? I mean, you can get inspections, you can get all the things that you need and see the stuff remotely. But that would make a lot of folks uncomfortable to be able to do that. So
Oh, for sure.
congratulations to you for
But it's also part of the training, right? Like you share with your investors that you don't need to get emotionally connected to a property. We have specialists on the ground and that's their expertise. It's not mine.
Yeah.
Like I can look at it and be like, oh, that's such a pretty property and get warm and fuzzy and get all emotionally connected to it. But it's not about that. It's about the bottom line. And will it push out a great number? Right.
Right.
So.
And so
Yes.
from there you got into multifamily. How did you make that bridge or that jump to multifamily?
Yeah. So what happened is I got invited to go to a multifamily event for a little 2-hour window for education. And I will be honest with you, I did not want to go. I did not want to go because I did not think I made the cut. Meaning, remember how I told you I thought multifamily was for only billionaires and the multi-millionaires?
Right.
I didn't feel like I was cut from the right cloth to be able to have an opportunity like such. And it didn't. My eyes were opened when I'll never forget. I was sitting in the front row with my arms crossed, listening to the man speaking, and all of a sudden it was as if the Red Sea was parted. And I was like, oh my gosh. It was like, it truly was like, look, it is absolutely possible. It was as if I had been playing way too small with the single families. And I like to correlate it to, Keith, playing Monopoly. When you play Monopoly, everyone knows what's the cheapest rent. If you land on Vermont, you're going to get the smallest little payout.
Right.
And I had been playing with all my single family properties. I had been playing on Vermont.
Yeah.
And all of a sudden, this gentleman is speaking and he's sharing how it's capable for any individual to do it if they have proper education. I just remember thinking, holy smokes, I'm worthy, I'm capable, and I'm absolutely qualified to land on Boardwalk every single time.
Right.
And so that was it. It was the eye opener. And I went, all right, let's roll up the sleeves and let's go.
That's awesome. And so did you start with as a limited partner in somebody else's deal, or how did you make that transition?
Such a great question. Here's what I'll tell you. I did it the ass backwards way. And I actually was the girl that said, okay, I want my own property. I got my own money. I'm going to take one down myself. Well, that ended up taking me 18 months. I could have sped that up mightily. And let me share, especially for your listeners, if you're hearing this, don't be foolish and think that you have to own and you have to operate. What I did wrong was I really should have taken my hard-earned money and I should have jumped in a deal right away and got my money working for me and linked arms with a really strong operator that has a track record, an impeccable track record, and has been around the block, has gone full cycle on a couple deals. I would have been further ahead. But listen, you live and you learn. So it's all good. But that's my advice for those listeners that are wondering, like, when do I get in? Do your research, find the right crew to link up with, but definitely don't wait. Get in as soon as possible.
Yeah, that's great advice. And you're right. You don't have to take down your own property to make it happen. I've struggled with that as well. Just, wanting to be in control of the whole deal. And it ultimately slows you down. What was the first one that you did take down though? How many units?
Yep. It was 104 units in Houston, Texas.
Okay.
That was my first property. So listen, I don't go small.
Right.
I like to go big. It was a $5.2 million purchase.
Wow.
Yep.
Okay.
It's been wild and it's been an exciting ride. And my goodness, we're 31 properties down since 2000. And let's see, that was in May of 2019. So we've made some pretty good ground
for
over the
sure.
years.
Yeah, I'd say so.
Yeah.
So from there, where all did you purchase, and did you partner? Have you partnered since then? I would imagine. And if so, have you kind of partnered with the same people? Have you switched that along the way, or what does that look like?
Sure. I started off in the beginning with a different group of people. And then I found my groove. And when I say I found my groove, I found my people. I found my tribe. And I think in this place and space, like your team and your tribe is your vibe. And I want one that's I'm working with, I choose to work with class act individuals that have a heart for philanthropy, that are not like greasy money hungry, but they're about sowing good seed and doing well for communities and of course for themselves. That's the overspill that I did, thank goodness, in 2019, the end of 2019. I became a co-founder of Quattro Capital. I've got 4 other partners. And there's something beautiful that happens when you are linked with the right team of brilliance that have the right heart set, the right mindset. You can do so much more together. And my goodness, together with just the 5 of us, we've taken down 27 properties. And so it just is living proof that if you are working with the right team and staying together and working cohesively and each staying in your lane and where you most efficiently flow, that's where the magic happens. And so I truly feel like every morning I wake up, I'm like, pinch me. Is this really my life? Because it's that enjoyable. Yeah.
That's great. And tell me a little bit about, so you've got four people, hence Quattro,
actually it's 5.
Is it 5? Okay.
It's 5.
Okay.
And the Quattro, let me clarify real quick. Quattro Capital is not about the people. It's about our 4 core pillars.
Okay.
And the first pillar is people. It's always, always, always going to be about people and making sure we're taking care of people and showing up and showing off for them in the right fashion. The other is properties. Of course, we desire to take down great properties that are in fantastic areas where the market is beginning to, we don't want to say booming. We want to be on the outskirts where the growth is happening.
Yeah.
So we like to buy the right properties that, of course, if we do that right, then we're going to yield the right profits. And then, of course, lastly, I shared, we absolutely have a heart for philanthropy and we do a ton of philanthropic work together as a team in sex trafficking, providing homes for veterans, taking care of the homeless. So what I can tell you is we're not a team that just talks it. We absolutely walk it.
That's great. That's great. I want to get into that piece here towards the end of the show and just really hear about all the different philanthropic things that you and your team are doing. But as far as the team goes, you mentioned staying in your lane and your client relations. I'm sure you do a lot more than just client relations, but that's a piece to what it is. Can you maybe highlight how some of the other partners, complement that?
Yeah, no, absolutely. So listen, I like to say that we stay in our genius, right? We all naturally have a knack, something that we're really good at. And I'll just talk about a couple of the partners so that you better understand. One of my partners, he's the head of acquisitions. He's finding the deals. He's underwriting the deals. He is actually an ex-aeronautical engineer. The guy is absolutely brilliant. Chad Sutton. You could lock him in a closet and he would go to town with numbers and creating spreadsheets. He loves that stuff. He eats it up for breakfast. He's also really great with his social skills, but that's his zone of genius of staying in that acquisition mode. Next, we have Kim Wendland, and Kim Wendland is the head of asset management. So she is the woman. We all get on those property management calls, but she is the one that runs the ship. The woman has a heart of gold, but she is absolutely brilliant. She comes from a background of working with Fortune 50 companies as a project manager that oversees multiple billion-dollar contracts at the same time. So she is just exceptional with running our assets. Super, super tight ship. And then, of course, we've got myself and Maurice, and we are more director of equity relations. And so we are in the forefront. We're working with our investors. We speak at events, we're on panels, we're out there a lot, we're on podcasts a lot, we're sharing the messages and helping other people understand that we're about them hitting their financial goals. And we want to be that piece that's going to help them get there, right? And begin to build their empire. And then lastly, we have Tammy, who is absolutely stunning and amazing. She is our head of transactions, and we call her the cog. She's the one that's running all the paperwork, getting all of our loans and things in place. She oversees a lot of our marketing and so on and so forth. So you can see it takes, I don't want to say an army, but it takes a team
for sure
to really be able to come together and to be able to take down, execute, operate, hit the business metrics, and be able to then go full cycle and sell it and have success and all the things in between, right?
Right.
But it's an absolute joy, Keith,
Yeah,
for sure.
that's really neat. And it sounds like a good compliment. Now, is everybody based? I know you're in San Antonio. Is everybody based in San Antonio, or are you spread out?
No, absolutely. We're not all in Texas.
Right.
There is one partner that's in Waco, myself in San Antonio. We've got Maryland, and then we've got Tennessee, one in Murfreesboro and one in Nashville.
Okay.
So we're spread out.
Yeah.
But here's the thing. We're on calls at least we've got 4 standing calls a week. So we're on calls all week, but then we make it an incredibly important part to make sure that we're getting together 2 to 3 times a year where we'll have a trip. And then we'll piggyback that we'll go to a conference and then we piggyback on top of that. And usually we'll have 3 days where we just mastermind, dive in, work on our systems and processes, and really just break bread and love on one another.
Yeah, that's awesome. Yeah. That's fantastic. Tell me about some of the markets that you're looking at right now. And, you mentioned maybe the ones that aren't necessarily in the middle of the boom right now, but on kind of the outskirts of it, that where the growth is headed. Where do you feel that's happening? And where are you?
I love Chattanooga. Yeah, Chattanooga, Tennessee is a great one. Evansville, Indiana, we've had some great success there. Let's see, Kentucky's got some great stuff going on. There's a lot of goodness that's to be had. And I want to preface that with, I don't feel like we're there right at the moment. And I don't want to confuse the listeners, but let's be real. We all know that the debt market is a little bit crazy. It's quite silly with what's going on right now. We buy off cap rates is a good, not solely cap rate driven, but cap rates are important. And right now, we don't know what's happening with cap rates. It's a little wonky out there. And so what I will say is there is a little bit of blood in the water. And it's going to get worse. We all know that. Yep. And I say that because at the end of 2023, we've got 470 billion loans due. That means there's going to be some fallout. What does that translate to? Translates to there's going to be some great opportunities here. And so we're like leaning in. We're not sitting on the sidelines. We're shoring up our processes and our standards, and we're ready to buy and acquire. And I think, lastly, in 2021, we took down 17 properties. Oh, wow. We know what Team Quattro is capable of, right? So now we're just looking to bring in some other individuals to link up with to help us get ready to make some massive headway.
Yeah, that's awesome. That's fantastic. And you're right. There is going to be, as you mentioned, there's, some people are calling it Red October, and that's just kind of the beginning of it. And it's going to be opportunity out there, right? So something to keep the eye on, and hopefully be able to make the moves when necessary. So when you are looking at something, are you doing value add? What is the strategy for Quattro Capital?
Yeah. So we definitely have been, our whole past, we've been looking for value add. I think that is where it's at. If we can come in, for example, a couple of our properties we purchased, we bought from owners that had owned for 25 plus years. Those are like ideal. One of them in particular, their rents were call it at $500 and they should have been at $750 a month.
Perfect.
But in the mindset of these folks that are in their 80s think, oh my gosh, if we raise the rents, we're going to lose our tenants and then our occupancy rates are going to drop and we're going to miss out on our cash flow. We love owners that have that mindset. It's unfortunate. It's sad. It's a bummer that that's how they think. But the truth is we're here to pick up and we'll take it off their hands for them and make it right. But with that being said, that just means that there's a lot of upside to be had, because we all know in 5 years, things are changing. And in 5 years, most cases, units need to be upgraded. They need a little bit of love. They need new flooring. They need new appliances. They need new paint, et cetera, et cetera. So we know if we come in and we dial these properties up or these units up a notch, that we can command a higher rent. How do we know that? We know that because we go and we look at the apples to apples comparison. So we're looking at other apartment buildings that are the same vintage, meaning they're the same year, make, model, right?
Right.
And we want to see what they're renting for. And if they're getting top dollar, we know that we can follow suit and have success. And so we don't make it harder than it needs to be. We don't need to reinvent. We just need to go see and confirm that somebody else out there has already been able to do it and do it successfully, right? And so in doing so, you know how it works. Our whole business model is, as you know, Keith, it's increase the rent, decrease the expenses, and increase that pretty bottom line. That's the business model. And so when we see an opportunity, we'll jump all over it for sure.
Tell me about property management. How are you using third party, and do you use a lot of the same companies, or is it really market specific?
That's a super great question. So I will tell you, first and foremost, we are not vertically integrated, which means we do not manage our own properties. We hire a institutional property management company. We've sold a lot, but we've got 19 properties currently right now. Of the 19, we have one property management company. Actually, the name is Vicinnia. They're fantastic. They've got 15 of our assets. They do a really great job. They've got a team of 150 people, and they absolutely are top notch, and they really oversee and do a fantastic job. They know how we operate. We run, as I said, a very, very tight ship. When we get on those weekly calls, we're all about success. I mean, we love to love on one another, but the truth is we're all about business. We're wanting to know, variance reports and budgets and our occupancy rates, and what have we been able to trade out? Been our lease trade out? How much more of an increase have we got? It's our responsibility as operators to make sure that things are trending in the right direction. So if we can give the property management to a team that's specialized, they can dig into the deep stuff and make sure each of those assets are functioning well. And then when we come on our weekly calls, we get to ask all the important questions that are going to lead us to, are they having success? Are our occupancy percentages on point? And what's our vacancy rates and all those things that matter? And then we get to course correct according to what we're seeing those numbers are, right?
Mm-hmm.
So it's a beautiful place to be. We don't want to be in the weeds. No, thank you. We're really, really good at what we do.
Right.
So we're going to stay in the lane where we most optimally function, which is buying apartment buildings and yielding great returns for our investors.
Yeah, I think that's smart, to rely on somebody that's all they do is property management. Like you said, it is like staying in your own lane. And I think sometimes people do try to vertically integrate, and in some cases it works really well for them. But in a lot of cases, I think they just are spread too thin. They've got too much going on where they can be focused. So that's neat. What about over the course of the time since you started investing in multifamily? What are some of the biggest changes maybe you've seen, throughout your journey?
What are the biggest changes that I've seen? I think that people, we're going to find out real quickly here. People have over leveraged ridiculously to a level that is not safe, right? I think for us right now, we're leveraging at 60 to 65%. Mm-hmm. There's other folks out there that are leveraging at 80, 85% or leveraged at 85%. And they're the ones that are in the hurt locker. I think it's important for your listeners to understand, why are they in the hurt locker? They're in the hurt locker because their game plan was to come and increase the rents. Mm-hmm. And along with coming to increase the rents, remember what happened. Our cost of goods went up drastically. Or you know what? Perhaps we couldn't even get our hands on some of those goods, washers and dryers and et cetera. And the delay of that then delays getting that increase in the rents, right? And so if you can't get the increase in the rents, and then you mix that with the interest rates going up, which means now they've got to service debt every month that's higher than they had planned, and they never got the rent increase.
Yeah.
What does that mean? It means they can't service the debt, i.e., what does that mean? They have now been caught with their pants down. Mm-hmm. And so they only are in that position to sell because they never were able to hit the business plan in the manner that they had initially set out for. right? We don't have a crystal ball. We didn't know what the rates were going to do. So unfortunately, some people that are really, really great operators are in a really bad position, right? So some
Yeah.
things are out of our control, but we do try to mitigate as much as we can by being uber conservative with what we foresee being able to get in our rent bumps. And we're conservative on our leverage, our amount of leverage we have. So those are things to look out for when you're looking to work with a great team.
Yeah, for sure. And it's hard to anticipate that the interest rates are going to basically double. I mean, that just even if folks
Yeah,
thought it was going to go up, and everybody knew it probably would at some point, right? It's going to fluctuate, but for it to happen as quick as it did and as
yeah,
drastic as it
wild
did, it like you said, a lot of people got caught. So
for sure.
and so were y'all already financing with like 65%, or have you made adjustments as well since it's gotten?
No, we've made
Yeah. Okay.
adjustments. We were 75, 70. Now we're 60, 65,
Okay.
just to be safe.
Yeah. Makes
Yep.
sense.
Yeah.
What and as far as through your journey, has anything changed as far as your buy box? Like, when initially you said you purchased a 100 unit, what are y'all focused on now? Is there a
Yeah.
unit consideration
So
or
good.
what?
Yeah. Listen, we're still looking and we're still vetting out properties. They've just got to be a really, really good deal, and the owner's got to be in the hurt locker. And I hate to say that because it sounds horrible, but we don't want to be caught in a position where we buy something today and a year later it's worth the same value,
Right.
right? So we've got to be very, very careful. So what we're doing right now is we actually have an income fund. And the income fund is like really our investors were wanting something that was a shorter duration and something more guaranteed. And so really it was like we just listened to our investors. And so right now we've got a fund where we're paying out 8% guaranteed return if they want quarterly payouts, or they can opt to have compounding interest, no payments, and then it accrues and ends up being roughly 9% a year for them. And it's only a 3-year commitment. We cannot believe the excitement and how many people are loving this. Why? Because the stock market, they've lost their money. Right now, people are like timid about multifamily because of everything that's in the press. They're a little bit scared of that as well, right? So then when you mix a great return that's guaranteed with only a 3-year commitment, and then on top of that, you sprinkle that with an impeccable track record with a top-notch team,
Right.
it's hard for somebody to say no. And so it's been extremely appealing, especially for our existing investors, which we've got a 630 investor base.
Okay.
So that's been really, really awesome. And it's just about getting the message out there that there's something great and a place for them to put their money and be able to preserve, protect, and grow it.
Okay, perfect. And so that's a huge investor base. Walk me through kind of how you've grown your company, where you've, what have you used to expand that investor base?
So we've got a really great portal. We work with Agora, and Agora has been fantastic. I love that we can get. It's very high tech, new with Agora, and so forward facing. It's really, really pretty, and it's appealing to the investors. Investors love to have something pretty that doesn't feel dinosaurish, right? And so that's what I would say with our portal. We've got our CRM that we use. HubSpot has been fantastic. As far as growing our investor base, honestly, I started off 1-to-1, but guess what? As you graduate and you're in the space for a while, now I'm 1-to-many. I get to speak at a lot of different events, on panels and podcasts. And so there's a lot of exposure out there. And so people have heard me that way, but I feel like what it really boils down to is when I can get on a one-on-one call and they're already warm and they're wanting to get in with our team, it's really just asking the right questions. Like, how can I help move your needle forward? What are your financial goals? Are you needing cash flow? Are you just wanting to save for retirement? And the more I can learn about them and their goals, their desires, and their needs, I become an anomaly because most people are reaching out saying, hey, do you want to invest with me? I've got this great investment. The truth be told, most people are not investing with you because of the investment.
Right.
They're investing with you because they like you, because you have a solid team, because you've got a great track record, because all these other people are speaking highly about you, right? And so that stuff is really, really important. It's really about relationship and being able to level set and be able to talk heart to heart, right? And learning more about them and what makes them tick and a little bit about their family. So
Right.
all of us, I think we all have something in common. We want to feel loved. We want to feel important, and we want to feel really it's just that special. They want to be taken care of. And if you can do that the right way without sounding like you're full of manipulation and it's all about you, then you have the secret sauce to win.
For sure.
Right?
Yeah.
Yeah.
I agree.
Yeah.
And what about as far as how do you communicate with your investors? So are y'all communicating on a monthly basis, a quarterly basis? What does that look like right now?
Yeah, so we're still quarterly basis
Okay.
with us. And I feel like we'll do some drip ins every once in a while. As a matter of fact, we're just getting ready to do a live webinar where we could just put them up to date with what's going on in the marketplace, just as information based, and share that with not just our investor base, but be out there so that we can be forward facing and really share with from our perspective what's going on as operators. But I think that communication is really, really important, especially with what's going on in our market right now. So other than that, our investors will for sure get the quarterly updates. It's some pictures. It's some reviews of great moments that we want to share of happenings at the property, and then of course the financials and so on and so forth. Right. So I feel like we do have a pretty good touch point with them, and of course we make ourselves available to our investors. So we get on one-on-one calls. We only have our crew. There's 5 of us.
Yeah.
We don't have 30 employees that are on our payroll or anything like that. We have some 1099 workers that do a little bit of our marketing stuff and so on and so forth. But we run very light, right? We don't want to be bogged down with a huge payroll. That's not what we desire. There's other firms out there that they are doing great with it. Rise 48 is a great one. I think they've got over 100 employees with them. Dan Hanford, I think he's got a whole bunch of employees too, and they do really well with it. They swear by it.
Yeah.
But here's the beauty: to each their own.
Right.
Right.
That's right. Exactly. Tell me a little bit also, Erin, if you could. I mean, you've got a unique perspective, and we were talking a little bit before the show that you do. You also are a limited partner in other people's deals. And maybe maybe we can talk a little bit about what you've learned from doing that, but also what some of the different advantages are. Obviously, growing the fund or growing your income, but there's also other benefits as well.
Sure. Yeah, I think that look, there's a lot of people out there that have Roth IRAs, solo 401ks, so on and so forth. Just as myself, I do as well. And so, yes, I love to invest in every single one of our projects, and I do that. But at the same token, I watch other operators that are doing other great things out there. And with the IRA money, it's the perfect money to take to other people's deals, because if you have an IRA or 401k, you cannot be the managing operator
Right.
for that investment with those funds. And so, excuse me, it's a great opportunity to go park your money with somebody that you admire and you've watched them and they've got a great track record. Pardon me. So I have done that. I really, really believe in that. I think it's great to be active. I also think it's great to be passive.
Yeah.
There's a little mix there.
Have you done that in multifamily, or have you expanded out beyond multifamily to other asset classes?
Yeah. So flex space, industrial,
Mhm.
car wash, and micro homes, things like that. Airbnbs. I've got a couple Airbnb tiny home villages that I've got.
Cool.
So yeah, I like to diversify across for sure.
That's awesome. And we were talking a little bit before the show also about, kind of teaching the kids finance. Can you maybe elaborate a little bit on that and tell the audience?
Oh, that's where my heart is. I love teaching parents how to get their kids in the game with investing. Look, I've got multiple streams of income because I am on a mission to help every person out there realize the power and of having multiple streams of income. And one of ours happens to be we build shipping container tiny homes.
Mm-hmm.
And those are really big right now. People are using them for Airbnbs. People are using them to help solve the affordable housing issue that's out there, the homelessness issue. And so basically, you can buy one of these little shipping container homes for $50,000, completely dialed out. And they make for the most perfect, when we started, the most perfect for our Airbnbs. And so, it really started with, we've got a beautiful Airbnb home in the hill country, but I buy strategically. It's on 5 acres. It's outside city limits. It's on unrestricted land. It has a pond down at the bottom. And so when I looked at purchasing that, I thought, oh my gosh, I want to put tiny homes down by the pond here. And furthermore, I want my little teenagers to take some ownership and to run these little Airbnbs as if they're their own. And so that's awesome. Really how it got started. My 14 and 16-year-old each had their own. The income that would come in from it, they would get half for their half for their DoorDash, Amazon, and the other half goes into their savings account. And that's their seed money for the next opportunity.
There you go.
It's the greatest way to teach kids how to take control of finances, how to stretch a buck, how to oversee and manage a property, and further have communication with the guest. Why? Because our kids are losing that connection and communication with adults. But if my 14-year-old has to get on there and say, I hope you're having an incredibly great time here in the hill country. Let me know if there's anything I can do to make your stay more enjoyable. Who's not proud of a child that is having those type of communication with adults and other people, right?
Yeah.
It helps equip them with the skill sets to level up.
Yeah. That's awesome. That's fantastic that you're doing that. What area in the hill country do you where's that property that you're talking about?
Yeah, so we've got 3 of them that are in Kerrville, Texas.
Mm-hmm.
After I did that little those there, then it was like, oh my gosh, I think I'm supposed to do something bigger. And so then I bought 15 acres in just outside of Fredericksburg, and we've got 14 shipping container retreat there. And then in Canyon Lake waterfront, we bought 4 acres, and we have 27 shipping container and tiny home, double-decker tiny homes right on the water.
Fantastic.
So It's been pretty incredible, and it's so much fun.
Yeah.
Especially when you can include other people to be a part of something great that you're creating.
Yeah.
Right?
Yeah. That's awesome.
Fantastic. Super exciting.
Yeah. So what else maybe, what is something that I haven't asked you that you feel like would be a good question?
Oh, yowzers.
Something we didn't cover maybe.
I would say OPM.
Yeah.
Other people's money. Let's go there.
Okay.
Because you may have a listener or two that's like, you know what? All this sounds great, but I'm not Erin, and I don't have a ton of money. And she's talking about all these, 200 million assets under management. Here's the truth. I am not here to be braggadocious whatsoever. It's literally to put fire under your fanny for you to rise up and to do something great with your life, to get equipped and to seize the moment. And so when I hear people say, oh, I can't do it because I don't have the money, that is a well-planned lie from the pit of hell. Here's why. I'll tell you this much. There are people that have money sitting in their bank account or underneath their mattress making nothing. And it's all about the way you position it. And I will use an example that I did when I bought my first property with Quattro Capital. So I'm not telling you to do something that I haven't already done. So I went on Facebook, and here's what I said. How would you like to be the bank and have it backed by real estate and make an incredible return? And I had 65 people that left comments and said, tell me more, highly interested. I went down that little column of comments and I went to the lowest hanging fruit. What do I mean by that? Who knows you, who likes you, who trusts you.
Yeah.
And I went to the top 6 people and I called every single one of them. And I said, I've got a great opportunity for you to make 7% on your money, interest only, 3-year maximum loan, or 2-year minimum, 3-year maximum loan. I got 6 people that said yes. I was able to get my hands on $300,000. Now, why would I want to do that? I did it because I had an opportunity to own 20% of a $2.5 million apartment building. And I could have taken my 26 single family rental properties. I owned them free and clear. And I could have done a cash out refi. But I kept hearing about this OPM and I wanted to know what it was about. And how could I talk about it if I had never tried it myself?
Yeah.
And so I literally got my hands on $300,000. It gave me 20% ownership of this apartment building. And guess what? At 2.5-year mark, we went in, we refinanced it. We added $1 million in value to the apartment building. I made my people whole and I walk away owning 20% of an apartment building without any debt.
That's amazing. That's
pretty awesome.
Yeah, for sure. For sure.
Although that property was a unicorn because it did push off 12% cash flow from year 1.
Wow.
So think about it for a moment. If I had to service the 7% debt, it came from the apartment building already.
Yeah.
And I still had 12 minus 7 equals 5. I still was cash flowing 5% without my own money.
That's incredible. It really is. It's awesome.
So everybody can do it, but at smaller levels. It doesn't have to be 300,000. I've done it with 50,000. I've done it again now with 150,000. So you can do it. You just have to get out of the fear and extend an opportunity. Don't beg. Don't ask. Extend an opportunity. Grandma, grandpa, how would you like to make 7% on your money? I've got a really incredible opportunity for you to be the bank. As a matter of fact, they don't even need to know what you're investing in. None of those people asked me what I was investing in because all it was a promissory note.
Right.
It's not their business. Either they like it or they don't, and they like you and they will, or they don't like you and they won't.
Right. Exactly.
You know what I mean?
And you don't know where they fall on that until you ask. Throw it out there.
Yeah.
So I love that.
Yeah, you don't know.
I love what you said too about not having, not to ask like as if you're needing something. It's an opportunity for them because ultimately it is, right? I mean, they're making really good money on this opportunity, and so it's a win-win situation for both parties. So
you're exactly right. Absolutely.
All right, Erin, we're running just a little bit long on time, and I want to be respectful of your time, being that it's late on a Friday. So, but how can people find out more about you, Erin?
Yeah, no problem. You can find me all over social media, or you can certainly go to www.thequattroway.com. That's 2 T's, QUATTROWAY.com. Learn about my team. You'll be blown away. But furthermore, when you go to the About section, you can click on me and you can actually send me a message. And I'd love to connect. I'd love to jump on a one-on-one strategy call and answer any questions you might have. The more I help you up level, the more I win. So The party's over. I'm happy to help.
Fantastic. And I've got a couple other questions if you have just a minute for them.
Okay, fire away.
Yeah. One would be just if you were to give somebody maybe who's starting out in their investing career some advice, what would that advice be?
The advice I would give you for sure, if you haven't read Robert Kiyosaki's book, holy smokes,
Rich Dad, Poor Dad.
Yes, thank you. Rich Dad, Poor Dad. For sure do that. It's a mindset shift. And if you've got the money and you're ready to get in the game, don't analyze to be paralyzed to then not make the move and then to miss out and 3 years passes by. I would tell you, find a class act team like Key, one that you know, like, and trust, and get your butt in the game. It's going to increase your confidence. Start getting your earning power. I don't know, the stock market's in the negative, so I'm not even going to say 5%, but start getting yourself in that position that you can get 16 to 20% return. And the sooner you get in the game, the sooner you're going to win, the sooner you're going to give it to be able to bless the socks off out of your heirs, out of your children's children. And so wait no longer. Don't be me and delay. Go get in the game and start growing that money. It's your responsibility.
That's right. Exactly. No, I think that's great advice. And you know, on the podcast, I forget who it was that told me, but you know, I've tried to repeat it multiple times as if it's my saying now, but it's not timing the market, it's time in the market, right? So taking that action now and just and getting in. What about one? And you threw out kind of you stole my thunder with my second question by throwing out Kiyosaki's book. But what about any other book recommendation? Anything that you've read recently? It doesn't have to be real estate, but
okay. Well, Multifamily Millions by Dave Lindahl is exceptional if you're looking to get in the space. But there is a book that I absolutely love, and I've been addicted to it for a year. I listened to it on Audible multiple times throughout the year on replay because it's always got great nuggets that you can apply every single day in your life. And it's called Who Not How by Dan Sullivan. Yeah. And the premise, just real quick, we all have these goals and desires to get to a certain place. And what if you could get there more effectively by putting the who that knows how to get you there sooner versus later? All of us procrastinate, but what if you got to stay in and play in the lane where you don't procrastinate, because all the things that you did procrastinate, you gave to somebody else to walk out and execute on your behalf. So it's just amazing. And that's how I've been able to have 5 different companies, because I hire a lot of who's that know how to get me to that final outcome.
Fantastic.
So you won't be disappointed.
That's right. A very great book. So, well, Erin, I've really enjoyed our time together. I think you've added a ton of value. I've loved the energy and just really enjoyed you coming on the Wealth Flow.
Yeah, absolutely. Thanks so much. It was my pleasure. You have a wonderful one. And hey, if y'all are listening here, definitely link up with Keith. He's got some goodness going on right now.
Awesome.
Take care.
Thanks, Erin.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.